This is how I made $1,060 day trading NASDAQ yesterday on February 2nd, 2026. Today's the 3rd. I'm recording this trade recap the day after. It's been, I think I've only taken, I think I only took 2 trades for the two trades for the month of January, if I'm not mistaken. If I took a loss, which was a very large loss that I would take again, and then I took a win. Made up, put me a little bit under break even for the month, but price action just it's been worse at times, but we're just in this big chop zone, chop fest on the daily, as you can see. I mean, going back towards Christmas, both indexes we just kind of chopped sideways. We made big moves up, big moves down, big moves up, big moves down again, big moves up today or yesterday where I took my trade. Big move down again today. I did not take a trade today. We're just moving swiftly up and down in this chop zone. The coming into the market yesterday. Let me get to my 6 a.m. candle. I don't want to reveal too much of what I did, what I took. We have no SMTs on the higher time frame other than the monthly SMT that we've had, where NQ is still underneath all-time highs. Its all-time highs is back here back in October, I believe. I could be wrong. Don't quote me on that. It might have been November. Way up and over here to the left. Whereas ES, this was its all-time high level here. But whereas that's where that's turned into a monthly level now, I'm putting a little bit less emphasis on that because intraday price action is going to behave slightly differently. Now on the weekly time frame, that might result in us and giving us a big massive move, but on the daily, we can't keep looking to play or that daily or that monthly SMT as our main confluence. And I think that's really what's resulting in this chop that we have going on here. We don't know. The market's trying to decide if it wants to play off that daily SMT still, or if we want to push new all-time highs on NQ. So it's just kind of chopping. But nonetheless, I can get into my trade here. Coming into the day, like I said, we had no SMTs. NQ took out this low. ES took out this low. We did have this slightly 4-hour SMT here. I mean, this is not even a low. It's like a 30-minute low because the low is this pivot here. I'm just kind of reanalyzing this as I see it. So yeah, NQ took out this low, and we do see ES being stronger to the upside currently coming into market open. Let me drop down to the hourly. So let's see, this is the 9 a.m. candle. 9 a.m. candle. And as we do for every trade coming into the morning, we mark out our prominent levels, our hourly levels for liquidity. And what we have is this hourly level in the middle of London session on both indexes. We have London session lows, Asia session lows, but we have a lot more levels to the upside on both indexes. And so initial bias, what I would have liked to see was both indexes took out London session high at open. I mean, that's a given. So I would have liked to see a little this London session get taken out, maybe a little retrace, take out this hourly level on NQ, which would then allow ES to run up, give us an entry down here around this hourly low, which would then allow ES to run up and take out all these highs. But if I drop down here to the 15-minute, I'll show you what we end up working with. So this is the 9:30 candle. Let me drop down in the 15-minute on NQ. 9:30 candle. We have our hourly levels here marked yellow. And you can see that instantly, first 15-minute candle open is a big stick up. We take out London session high on both indexes. Then what we have is this hourly level here, both indexes hovering underneath it. And I believe 135.75. So yeah, so NQ took this out. And what ES ended up doing is taking this out again. So next candle. So all these levels taken out here, and this is within the first 30 minutes of open. So we still don't have an SMT. NQ took out these levels, all these levels here, and ES similarly did the same, right? So now our next level on both indexes is this hourly high here. NQ's a lot lower underneath it. ES is a lot closer to it. So at this point, I'm not interested in anything at all. We could say the 15-minute is extended, yes. Could I anticipate some sort of a retrace into a 15-minute fair value gap? Could we argue for it? Yes. Am I going to take that purely? No. Because we don't have any SMTs. So I'm just sitting at my computer doing some other work, and I see we can just continue to put in these massive sticks to the upside. And what ends up happening is this is around 10:30, right? So this is around the time that I stop looking to trade because volume starts slowing down. And most of the time, our targets for the day have been hit, right? As I said, I was looking for a way to enter and target all these highs on ES, but I never got the opportunity. Absolutely never got the opportunity. 15-minute or first from session open, we just rip up, poke up. We never got a retrace down in here. We never got a 5-minute SMT. I mean, at this point, I was willing to take even if ES and NQ formed a 5-minute SMT, I would have longed ES down here in a discount. But I'm not entering on ES all the way up here to target these highs. And there's very well a chance that we could have retraced, put in an SMT at a 5-minute low or 15-minute low before then going up. So kind of unfortunate that my main draws on liquidity were hit without the opportunity for entry. But what we can see at 10:30, after ES takes out this level here and this level here, we have an SMT on NQ. Not only at this hourly level, but this daily level here. Both these levels. NQ's underneath both of these. ES runs up and takes out both of them. So what we do is we have an SMT from this high up to this high, and from this high up to this high. And what this looks like on NQ is from this low down to this low, and this high down to this low as well. So let's drop down to the 5-minute. And what I've done here is I have 15-minute equilibrium set here at 50%. It's kind of hard to see because I have my colors darker, but from this move up to this pivot high, 15-minute, this is our equilibrium. Okay, so what we have, let me get over here to the 5-minute. Get my chart a little bigger. So, like I said, this was 5:45, right? This is late into the trading day. And as we see, once again, never really got an entry on ES, or the ability to take an entry on ES all the way up to target all these highs. I mean, what really was there? I mean, we had this down to here, and then where is this SMT? This low. I mean, yeah, even then this favors NQ. So, and this is super high up into a premium, and I don't like the risk reward that's there. I mean, on the 1-minute we're entering somewhere in here. I mean, at that point, where do you risk 50% equilibrium, bottom of this gap, just to go up and hope for the rest of these levels to get taken out when a bunch of them already did? This Asia section got taken out. This level here got taken out. all within the first 15 minutes, so we very well could have reversed off of it. But longs were ideal, but didn't get the entry form. Didn't get the entry I wanted. And after we take out this hourly level on ES, right, our next hourly level is all the way up here. So a ways away, we've already hit well above the daily ATR. Our next hourly draw is all the way up here. So when I see that we put in this SMT at these two daily levels on NQ with ES, I sit here and think, okay, there is opportunity to trade a NQ reversal, or a retrace at least, not reversal, but a retrace. We have this 5-minute gap here. Let me apply this to all the charts. I was not going to take a short based solely off of NQ underneath these hourly levels, right here and here, these yellow markers. NQ being underneath these hourly levels, and then a disrespectful order flow, because we very well, we're late in the trading day, we very well could have chopped sideways or grinded up. But what I see is something that aligns with our trade philosophy. This is what happens for me to take a trade. We have SMTs, like I said, at these hourly level and daily level. Get a disrespectful order flow, we inverse this gap. This 5-minute fair value gap here gets inversed. Then what happens is we get a retrace. And what we do is we get a 5-minute SMT. As you can see, we have this high down to this low, and this high up to this high. At this point, even though NQ is closer to this draw in liquidity, right? NQ could very well came up and grabbed this. I was looking at the 1 minute. Let me show you the 1 minute on NQ. And this just comes down to reading price quite literally minute by minute in situations like this. Let me get back to where it was. I told myself, this is where our 5-minute gap's inverse. This is our retrace. This is where we put in a top at the 5-minute SMT. I told myself, one of two things is either going to happen at this specific spot, right? We've already made our retrace and we're pushing up. Either NQ is going to make a new high, and once it makes a new high, it's probably going to grab this level. That trade I probably wasn't going to take because ES already hit the targets first, and I'm not going to trade the liking index. Or B, we inverse this 1 minute fair value gap and this one all the way down here. I told myself, if we come down and sharply take out this 1 minute fair value gap here, I'm entering. Because we have a disrespect order flow on the flat 5-minute, high time frame SMT, push up, make a new high, a 5-minute SMT, and then once if we were get a good disrespected price action here, I'm entering short, and that's what we did. You can see my entry, and then from there is when I decide to set my take profits. Ended up getting good risk reward on this, really. I mean, I entered, as you can see here, risking this high, and for my take profits, what I did was I set my take profit 1, this 5-minute swing low up to this high, right? This is our 5-minute move that led to our SMT. 50% of that is this price level here. I'll go ahead and mark that. And I believe that is where I ended up taking my first profits. Yep, right there, equilibrium, a little bit above it. So from there, I moved stops to break even. And then what I did was I saw we had this 5-minute gap here under equilibrium. So that is where I set my next take profit. Let me go ahead and make this orange. And this is just set and take profits based off of confluences. And this ended up being really unfortunate because in line with this 5-minute fray gap, we have this high here, which acts as a good level to bounce and retrace off of. retrace towards to then continue out of. So what happened was I ended up getting stopped out break even by 2 points. And this has been just a reoccurring thing for me where I've got exact stopped out on my losses before seeing a trade go to and work in my favor, or where I've been so close to scaling and taking more profit, and then it just reverses, and I ended up getting hit break even. It's been super frustrating, so I'm gonna have to adjust accordingly. I mean, it comes quite literally down to me setting my take profits and then moving it 4 or 5 points, another direction. But yeah, it would have been super nice if we would have hit this level here. I mean, it's where the 5-minute 20 EMA was, and I had that in mind as well because we tend to see bounces off that. And at the time, this looked like a good take profit level because that EMA's down here. But after we made this dip down and pushed up, our EMA, in hindsight, is what it looks like. But would have been super nice if I would have been able to hit that. And then my last take profit was going to be the 15-minute equilibrium that I had spoken about before I had broken down into the slower time frame. But it's unfortunate. Did not discount the fact that, let me go back to the hourly here. Once we poked above and formed this SMT, right, we still have this big gap on ES, the rest of this big gap. And normally when we see this illiquid of a price range, the price typically moves fast through it and then fast back through it, right? There's not many contradicting orders in these big ranges here, right? Once bulls get up into this zone, there's not many spots for bears to put in contradicting orders, right? Because there's not many prominent levels for them for liquidity to be grabbed. So I was also not discounting that, but I was not discounting the fact that we could have made this retrace and that ultimately could have ended up going higher, which is what we did, right? We ended up filling in perfectly the rest of this gap before we ended up chopping and going overnight. And that's what happened in Q as well. After this retrace, ended up going and taking out the rest of these levels. ES filled the rest of this gap, moved swiftly through this gap, and going into price action today, once we had this big range again, right? We got into it and just flooded through it, both indexes. I took a trade sim because this is not a trade that I ordinarily take. I took a short all the way down here once we entered this range already. I like a little bit more upside to my trades, but nonetheless, still, that's how price action works, right? Once we get into a range like this, you can see we move fast through it, fast back through it. I'm willing to bet, yeah, it's just super strong moves, right? Because back and forth both directions, because there's not many contradicting orders. But I'm talking too much about the next day's price action. But yeah, that was yesterday's trade recap. Would have been real nice if I would have been able to hit this take profit because it would have been almost a 2-to-1 risk to reward on my second take profit. It would have turned a $1,000 win into a $1,800 win, I believe. And that's with still going one contract break even because I would have had a third take profit set down here, this 15-minute equilibrium, or this 5-minute low here. But that was yesterday's trade recap, and thank you.